Yo, what's going on, guys? My name is Darren Belzer, and I'm a real estate agent in the state of Florida. And don't buy a single family home. Instead, leverage your FHA loan to purchase a duplex or multifamily property, allowing you to have leverage on your loan and build equity while living for free. Right? How does that sound? Well, in today's video, I just want to go over real quick what is an FHA loan, how can you use it, the pros and cons of an FHA loan, and then how do you buy a duplex or multifamily using that same FHA loan. I mean, look, the reason I got into real estate in the first place is because I wanted to learn about the field and myself become an investor. I figured if I have my license, I can be exposed to a lot more things and a lot more tactics to go ahead and purchase my first property. Real estate is a vehicle to build wealth and create passive income and be able to have enough to pass on to the next generation. And I firmly believe that the FHA loan is the best way to go into getting your first property for as little down as possible. But before we get into investing, I want to tell you what is an FHA loan and what it's used for and how it came about. Well, an FHA loan is pretty much a loan that is backed by the Federal Housing Administration. I almost said authority. But most people think that FHA loan stands for First Time Home Buyers Assistance. Well, you can kind of switch it each way to use it that way, right? An FHA loan is a loan that requires a minimum credit score and allows you to use only 3.5% of the total value of the property, so the purchase price, as a down payment, right? A lot of first-time home buyers use an FHA loan to get out of rent and make it more affordable for them to go ahead and purchase their first home. But there is so much more ways to use it and so many different programs within the FHA that allows you to go ahead and purchase your home or even purchase a multifamily, which is what we're talking about today. The reason I want to focus on multifamily, like I said earlier, is because I'm a firm believer that leverage gets you places, right? If you can leverage your money to further yourself ahead, do it. I'm not a guru. I don't want to be on none of these other guru podcasts like Graham Stevens or Spencer Cornelia saying I'm lying to you guys. I'm here to actually give you facts and process. This might be a boring video for most people, but to me it's super interesting. And if I were you, I would like and subscribe to this channel to get more information about real estate. FHA loans come in two terms, either a 15-year term or a 30-year term, which spreads your payment over a long time. At the same time, FHA loans also come with mortgage insurance, which insures the lender against you defaulting on the home. So these FHA, insurance or mortgage insurance are always on that loan, unless you put in 20% down. But if you put in 20% down, I don't think you'll be going to an FHA loan. You'd find some other vehicle to purchase your home, like a conventional home or maybe a private equity loan. If you have that much money, use a private equity. But that's a whole different video as well. Like everything in life, there's pros and cons to anything, right? So most of the pros on the FHA loan is that you can come in with a lower credit score. While a conventional loan will require to have at least 640 credit score, an FHA loan can sponsor you as low as 580, but most lenders want to see a 680 credit score to approve you for an FHA loan, along with a steady income that you can prove for the past 2 years that you've been doing the same type of job, or you've been employed in the same field for 2 years at least. You can also lower your down payment, coming in at 3.5% down. You're not putting as much money out of pocket to purchase your home. It allows you more flexibility. Again, depending on your credit, depending on how much money you make, you have those parameters to choose how much you're willing to spend on a home. It also allows you to stop renting a lot earlier, a lot sooner than you want to. Since FHA loans were originally established for the first-time home buyers, at the end of the day, the government wants you to go ahead and purchase a home and be a homeowner, right? They want you to be active in the community, paying those taxes, helping the schools in the area, select your local officials, pay for the police and fire departments. All these come from your property taxes. And the way they levy property taxes is, I'm not going to go into a whole civic duty, but the way they levy property taxes is on the home value. if your home value rises over the next couple of years, you're going to pay more in taxes. One of the cons of using an FHA loan is that you'll not be able to avoid that mortgage insurance. It is guaranteed to come in your loan. Since your credit score is lower, you're a bigger risk of default. So to protect the lenders, you have to pay a mortgage insurance. You can roll the upfront insurance into your closing costs, but your annual premiums will be divided over 12 months, right? And they'll be divided over 12 installments that you're paying every single month on your mortgage. Sorry, I had a hiccup. Your property also have to meet certain requirements. So now to get into FHA loan, it's not just any property that will do. You need to have a property that's in good standing, that passed inspection, new roof or newer roof, no termites, no holes in the wall, no major repairs have to be done to the property. It can be cosmetic, but it cannot be functional. You could eventually pay more for the property. When you compare mortgage rates in between a conventional loan and FHA loan, a lot of times the FHA loan does have a higher mortgage rate, but again, it's because they're looking to protect themselves. And although the APR is a better comparison because of the points on FHA loans, sometimes the APR can be higher than the conventional loans, but that's just because, again, you're coming in with a lower credit score and a lot less down payment. And the final con is that some sellers might shy away from lending to somebody, well, not lending, from selling somebody with an FHA loan because they're not as competitive as someone that has a conventional loan. When you go under contract, you want to make sure that the property closes. You do not want any hiccups, any hangups. You want to make sure that property closes. As long as you're buying a multifamily property with the intentions of living in one of the units, you can use your FHA loan. Look, as long as you're buying a multifamily property, a duplex, triplex, or fourplex, you cannot go higher than fourplex, and you have the intention to live in one of the units, you can use the FHA guidelines to qualify to purchase that property, right? Many first-time homebuyers do not know about this, and they don't even think about being landlords because it is actually a lot more expensive to purchase a multifamily property instead of a single-family home. I mean, it's true. You're getting 2 units for the price of 1. You're going to pay a little bit more, but at the end of the day, it's a bundle. It comes in a bundle. Look, as long as you're buying a multifamily property, a duplex, triplex, or fourplex, you cannot go higher than fourplex, and you have the intention to live in one of the units, you can use the FHA guidelines to qualify to purchase that property, right? Many first-time homebuyers do not know about this, and they don't even think about being landlords because it is actually a lot more expensive to purchase a multifamily property instead of a single-family home. I mean, it's true. You're getting 2 units for the price of 1. You're going to pay a little bit more, but at the end of the day, it's a bundle. It comes in a bundle. A little secret that most investors don't tell people is that you can use 75% of the property's rental income towards your monthly income. That means if you have a property that's renting for about, $2,000 a month, $1,750 of that rental income will count towards your income right away, right? The lender will calculate everything and put that so that you benefit from the rental income into that property. So let's take an example. If a property costs $545,000, it's a duplex with 2 units, and the 1 unit that you're renting out rents for $2,000, $1,500 of that will come in and be used towards your, $1,500. $1,500 of that will come in and be used towards your monthly payment. That means that to qualify for that home, without even looking at the math, you need to make about $6,000 a month. But now, with that rental income, $1,750, you subtract that, your payment come down to about $4,000, $5,000 a month that you need to make in income. So about $2,500 a week will qualify you for that home. Now, does that fully pay your monthly payment? Maybe not on a duplex or a triplex, but on the triplex, maybe. But it does allow you to leverage your income, the property's income, for you to lower your payments. This is why a lot of first-time homebuyers, when they speak to me, they want to tell me they want to live in a mega mansion. I tell them, no. If you want to work with me, we're going to work as investors. At the end of the day, you're buying your future and your first home. And your first home never has to be the most perfect home, just has to be a home. Down the line, once you're more stable, you know that you want to be in that area for a long time, I recommend looking into single family property. But until then, leverage as much as you can. Leverage, 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 leverage. I'm going off script here because I'm actually really passionate about that topic. And I'm telling you this because I'm also taking notes for myself because I'm looking as the market is rising into personal home very soon for myself. Conclusion, if you want to be an investor in real estate, you really do not need much, right? You can start with very little and grow that exponentially fast. You know, at the end of the day, this channel, everything that I do is to give you tips and tools for your real estate purchase. And if you need a partner that is not afraid to guide you through these steps, feel free to contact me. And if you need more information, I will leave a bunch of links down below that will guide you throughout this process. And if you're in the South Florida area, need some help in purchasing your first real estate property. Sorry, I'm so excited. I'm mumbling. But if you need some help to purchase your first income property or first property in South Florida, feel free to contact me. All my information will be down below. I'm here for you. On that note, have a wonderful day.